Renowned columnist and senior analyst Mr. Kashif Mirza wrote in his column, BRICS currency, de-dollarization of world economy and Pakistan. The dollar's share of international reserves had fallen from 70% to 58.36%, marking its lowest level in 25 years. Idea of BRICS new currency is a quest for global de-dollarization accelerates. BRICS advances alternative to US-dominated financial system and indicated that a new currency project might be announced at the upcoming BRICS summit in South Africa. Earlier this year, Brazil and Argentina also proposed to work towards creating a common currency, called the SUR, to enhance regional trade and financial exchanges while reducing reliance on the US dollar. The alliance's other members, Brazil, China, Russia, and India, have already taken steps to bypass the US-dominated global trade and finance system. The current BRICS countries already account for 40% of the global population and 1/4 of the global GDP. The alliance is now set to expand with Iran and Saudi Arabia having initiated the formal process to join. Over 10 other countries, including Egypt, Algeria, the UAE, Mexico, Argentina, and Nigeria, have also expressed interest in joining the bloc. Senior analyst Kashif Mirza added that the growing trend towards seeking alternatives to reduce dollar dependence, including trade in local currencies, is also being deliberated upon by regional organizations, including the Association of Southeast Asian Nations, ASEAN. Not only is the BRICS bloc seeking to move away from dollarization in matters of trade and finance, it has also attempted to provide an alternative to the US-dominated Bretton Woods institutions, the International Monetary Fund, IMF, and the World Bank, in the form of the New Development Bank, NDB. At present, aside from the 5 BRICS countries, Egypt, the UAE, and Bangladesh are also members of the NDB. More and more countries, from Brazil to Southeast Asian nations, are calling for trade to be carried out in other currencies besides the US dollar. The US dollar accounted for 58.36% of global foreign exchange reserves in the fourth quarter last year, according to data from the IMF's Currency Composition of Foreign Exchange Reserves, COFR. Comparatively, the euro is a distant second, accounting for about 20.5% of global forex reserves, while the Chinese yuan accounted for just 2.7% in the same period. China is one of the most active players in this push, given its dominant position in global trade right now, and as the world's second-largest economy. Russia and China have also been working towards connecting their banking communication systems. However, the US has threatened to expel Chinese banks from SWIFT if this proceeds. Nevertheless, both Russia and China have reaffirmed their commitment to advancing bilateral trade in their national currencies. Based on the calculation of IMF's data on 2022 direction of trade, mainland China was the largest trading partner to 61 countries when combining both imports and exports. In comparison, the US was the largest trading partner to 30 countries. Kashif Mirza analyzed that the changing global economic dynamics are driving the so-called de-dollarization trend, which can benefit local economies in a number of ways. Trading in local currencies will allow exporters and importers to balance risks, have more options to invest, to have more certainty about their revenues and sales. Another benefit for countries moving away from using the dollar as the middleman in bilateral trade is to help them move up the value chain. Meanwhile, growth of non-US economic blocs also encourage these economies to push for wider use of their currencies. The IMF estimates that Asia could contribute more than 70% to global growth this year. US growth might slow, but US growth isn't what it's all about anymore. There is a whole non-US bloc that's growing, which is going to be a reinternationalization of flows. Renowned columnist and senior analyst Mr. Kashif Mirza stressed that geopolitical risks have also accelerated the trend to move away from US dollar. According to Bloomberg, the yuan has replaced the US dollar as the most traded currency in Russia. So far, the US and its Western allies have frozen more than $300 billion of Russia's foreign currency reserves and slapped multiple rounds of sanctions on Moscow and the country's oligarchs. This forced Russia to switch trade to other currencies and increase gold in its reserves. In the Middle East, major oil exporter Saudi Arabia has signaled it's open to trade in other currencies other than the greenback. Although it's not a complete breakaway from dollar-denominated oil trade over the short term, but what they're saying more is, well, there's another player in town, and we want to look at how we trade with them on a bilateral basis using yuan. Despite the slow erosion of its hegemony, the US dollar is not expected to be dethroned in the near future, simply because there aren't any alternatives right now. Euro is somewhat an imperfect fiscal and monetary union. The Japanese yen, which is another reserve currency, has all sorts of structural challenges in terms of the high debt loads. The Chinese yuan also falls short. The yuan reserves as a share of total reserves, it's only about 2.5% of total reserves, and China still has current account restrictions. That means that it's going to take a long time for any other currency, any single currency, to really usurp the dollar from that perspective. While summing up, renowned columnist and senior analyst Kashif Mirza concluded that in fact, the de-dollarization trend has already emerged in a number of countries and regions including Russia, China, and 17 other countries. The greater use of other currencies in global trade would lead to further diversification of the reserve assets held by national central banks. But in the past few years, the trend toward the de-dollarization of economies in the world has become increasingly apparent. Indeed, more and more countries striving to switch to settlements in national currencies, and the already emerging global de-dollarization push could further accelerate with countries increasingly adopting alternatives to the US dollar. Although Pakistan has not been an enthusiastic advocate for such a de-dollarization partnership, but has been exploring a rupee-ruble trade arrangement with Russia, Pakistan must seriously think about diversifying its foreign exchange reserves, increasing investments in other currencies, and by switching to settlements in its own national and other international currencies between partner countries.